To first introduce myself, my name is Melanie Mondello. I work for the Technical Systems Collaborative. Most of you know us as TAC. And I'm here today with Rosa from the CoC staff and my colleague Natalie Goodman, who's also from TAC. If folks want to, just so I kind of know who's in the room with me, if you want to go ahead in the chat, introduce yourself and put the role that you play within your CoC program, that would be great. We have a pretty small group today, so we'll be able to come off mute later to talk and ask questions. So today we're going to be covering, like I said, financial management. First, we're going to talk about how to identify the certain costs so you can categorize them and track them. Then I'm going to talk at a pretty high level about indirect cost rate, how it's established, how you bill it, those types of things. And then we have time for resources and questions. So Natalie, you could go to next slide. Again, it would help me to know kind of what your role is to see who's in the audience. We don't have an official poll, so you can just put this in the chat of, are you project staff, manager, direct care? You're kind of in the day-to-day of the project. Are you here from the finance department, which would be really exciting? I see a couple, VP of Finance and VP of Grants, so that's great. We have some finance folks with us today, the general executive team, and then if I didn't list who you were, just go ahead and put that in the chat for me. Great. Okay, so we have a pretty wide mix of people. A lot of finance folks, which is great, some case managers. Okay, this is good. So we're gonna have a really good conversation today. Let's go to the next slide. So financial management, you can go next slide. What I wanted to do was start with an overview about financial systems and some like good financial practices so that as you're listening to this information, we're going to level set a little bit about what is within the control of the project staff, what's in control of the finance department, and then the overall agency and how those intersect. So overall, as a general rule, the financial management system is set up at an agency level. Your project has certain things they have to do. They have to do timesheets, you have to track all your expenses, but overall, the flow of funds in and out of your agency is based on an overall financial management system that has typically an accounting department. You have people, again, gathering your documentation, looking at the documentation, talking with the project staff. So the reason this is important as a framing thing for this is some of the things we talk about today are within control at the project level, but a lot of what we're going to talk about today is in control at the agency level. And the reason the financial systems are controlled at the agency level is the federal grants have global rules, right? They have to be put across the whole agency. Your organizational policy has to work for everyone. You can't have every department doing its own thing. As you grow, that would get really unmanageable. So just wanted to kind of put that framing out there, and so we all kind of know like we're working together on this and kind of use that lens as we look at the information going forward. Okay, next slide. We are going to go over a lot of jargon today. So I thought it was a short list, then it became 2 columns of acronyms that you're going to hear. If you're a finance person, you're probably like, this is my place, right? Like, I know what all these mean. So again, we're not going to do like formal polls, but just kind of look at these. If you have a piece of paper next to you, kind of jot down what you think they may be. I'm going to be talking about these as we go through. And then at the end, we'll do a kind of post test, see if you got them all. And then I have a slide that decodes them. So as we go through, I'm definitely going to talk about these things, but just wanted to kind of visually show you how confusing administrative costs are, because all these things in one way or another are rules for administrative costs, type of administrative costs. So it's really important the terminology you use, because it gets confusing really quickly. If I'm talking about something and Natalie's talking about something, we may be using the term admin very differently, and then that's not going to translate into good financial management and good cost tracking. So let's go to the next slide, and we'll again come back to all those terms throughout. So When you have a CoC program grant, whether you're a direct recipient, meaning you have a contract with HUD, or you're a subrecipient to someone who has a direct contract with HUD, these are things that HUD is looking for you to do and implement. They want you to track eligible costs, very, very important to HUD. There are match requirements for CoC programs, 25% of everything but leasing. They want you to draw down, they want you to be timely, all of these things. Today, we're really going to talk about eligible costs and a little bit of the record keeping that goes with those eligible costs, basically talking about how to document your personnel expenses, whether they're project administrative expenses or indirect expenses. So there's a lot more to financial management than this, but we just wanted to start here. Let's go to the next slide. So a good financial management system, and this is just kind of level setting for everyone in the audience that isn't in the finance department, is things should be really clear and transparent. It shouldn't be up to me as a staff to wonder what I'm supposed to do. There's in your agencies, there's a financial handbook, right? Like it's really clear if I go buy curtains for the project, because I'm a place-based project, what do I do with that receipt? How do I do this? When someone looks at that and how I coded that expenditure, like, does it make sense? Would Natalie make the same decision that Melanie made, right? Like clear, transparent accountability. Also looking at, are you planning how you're going to spend your money? So do you have a budget? Do you stick to that budget? Do you make adjustments to the budget as you need? So these are all just general principles that should be guiding any system that you create that is around your financial management. If you're the one creating the policies, it's a good idea to have a non-finance person read them and make sure they make sense to the layperson. Otherwise, you might need a little bit of a decoder ring or a little extra information so that people can follow the policies that you have in place. Okay, next slide. There's something called 2 CFR Part 200, the Uniform Administrative Requirements. 2 CFR Part 200 is a very large regulation that governs a lot of the administrative functions that we all don't even know are happening behind the scenes, but our wonderful finance departments are taking care of for us. A lot of the policies that you have to follow as managers and staff are probably coming from things that are in this very large requirement that is overarching administrative requirements. Some of that is indirect that we're talking about today. It could be your procurement, how you're buying large items. There's a lot in there. We're going to really just talk about one piece of it. And we just have some hyperlinks here when you get the slides. And when these are posted, you'll be able to click on those if you want to dive deeper into it. But I'm going to be speaking to it today. So I just wanted to let you know this 2 CFR Part 200 is really the administrative rules that for any federal program that you put in place, these are kind of the things you have to do structurally to support that project implementation. Okay, we'll go to the next slide. Again, just some background, some key financial management components. We have cost principles, which we'll be talking about. We have budgeting, which we'll be talking about based on allowable costs. The other things on this list, we're not going to talk about today, but I didn't want to withhold the information from you. If you want to dive more deeply into this, there's going to be resources at the end of the presentation that you can dive more deeply into all of these things. So we'll go to the next slide. So cost principles and reasonableness tests. So here you can see HUD and, in general, the federal government expects the funds that they award to be spent on reasonable and necessary costs to the project that you're running. So if you're running a rapid rehousing program, an RRH program, then a reasonable and necessary cost would likely be rent for someone who's eligible. It probably could be case management costs. It wouldn't be birthday cakes. It wouldn't be trainings that have nothing to do with the rapid rehousing program. It wouldn't be people that don't work on the rapid rehousing program. So all of these things need to be, when you're looking at reasonable and necessary, it has to be linked back to the project. It also has to be allocable to the project, and allocable gets to, is it eligible? Does the regulation that supports this project say you can build this, right? Like, just because we have a cost does not mean that the federal grant is going to cover it. It could be something that you're going to cover with your own funds, or a local entity may cover. Things that are necessary aren't always covered in the federal grant. It could be things that you're bringing in. The other part of cost principles is being consistent. Those of you that know me have heard me say, like, it's better to be consistently wrong and catch it and fix it than to be inconsistent and not understand where people need training and how to course correct. So being consistent is really important because you can identify it, you can fix it, and then you can explain it in 3 years if you get audited by any of the entities that are funding you. And then documenting things. So everything we talk about today, there's going to be documentation to support that. We're going to talk about CAPs, which are cost allocation plans. We're going to talk about timesheets and time and effort logs. We're going to talk about payroll documents. And then last but not least, we're going to spend the bulk of our time in the direct and indirect cost space. So we'll go to the next slide. Just a couple more kind of level setting before we get into the meat of the topic. Budgets. I hope that all of you have a project budget that you're working from. Each project should have a budget. HUD asks you to submit a budget when you apply to the funds annually. The HUD budget alone isn't going to get you what you need to manage your program well. Here you can see some principles that go well beyond the HUD chart that's required as you submit a project application. I want you to think of the budgets as a plan, right? If the plans change, what actually happens could be a little different, but your budgets are your plans. You look, I have this much resources, I need to do this much work. Is it going to work? Where are my gaps? How am I going to do this? If I leave and Natalie takes over, what does that mean? You know, it's the year-long plan for how you're going to spend the federal money, the matching funds that are required, and then any other funds that you're bringing into the project. It helps you forecast. It helps you control your expenses. If anyone's curious, they can look at the budget and say, oh, well, we didn't budget for 3 case managers. We budgeted for 2. Like, what are we going to do? How do we rework the budget, or maybe adjust caseloads based on what you need? Budgets are also really important because they hold everyone accountable and they create a standard narrative about what you think you were going to do. So that way, if you have any changes that you need to make, you can go ahead and make that as a group, make those adjustments and move forward. Okay, we'll go to the next slide. This is a little bit of the HUD financial jargon, but fund accounting is how CoC program finances are handled. And that just means that you are tracking everything that your staff who are working on federal grants are doing, because HUD wants to make sure that the time that is billed to them is not spent working on non-HUD things. So if I'm half HUD work and half local work, I would still track all of my time because HUD wants to see that my salary is 50% them and 50% charged somewhere else. So you really need to, make sure that anyone working on the CoC program is tracking their costs, and that those costs and those tracking details are making it up into your financial system through timesheets, time and effort logs, your payroll system, all of those things. So it's just really important to know and track by project. You also can't track by like CoC program. A lot of people want to track it like a really high level, but HUD considers each grant its own funding stream. So fund accounting also helps you track Melanie rapid rehousing case management, Melanie rapid rehousing project administrative work. So it all is tracked separately. So that way you can monitor against your budget, you can monitor against what you promised HUD and other funders. Okay, last thing before we get into the actual costs that you're looking to track, go to the next slide. There's something called a CAP, a cost allocation plan. Again, this is something that's at the organizational level. This is a plan that helps agencies determine what they're going to charge directly to a funding source, what's going to be part of their indirect costs, just agent costs it takes to run the agency. It will also talk about methodology if there's joint costs. So a lot of this comes up around cell phones if someone's 75% on this grant and 25% on this grant, they're not going to have two phones, right? You're going to just allocate that cost out by each project, or maybe in your cost allocation plan, maybe all of that is part of your general overhead or your, administrative costs for the agencies. Your cap is your kind of roadmap for how you are going to treat charges, process charges, and look at the eligible expenses, and then you can make adjustments based on that. One thing that I see a lot where people get confused is some people are like, great, we have this cost allocation plan. It says that we're gonna allocate people to projects. Melanie's allocated 50-50. I don't have to do timesheets or time and effort logs anymore. And that's not true. Cost allocation plan is up here, right? It's a really high level. And the time and effort logs and the timesheets, those are at the employee level, and they roll up into payroll. But how those charges are processed is governed typically by the cap and how your agency is putting all those expenses out there. Okay, we'll go to the next slide. So that was, again, just some level setting in case you're not a finance person. Maybe now you want to be a finance person, maybe you don't. But just some general terminology so that everybody knows kind of what we'll be talking about going forward. And I should have said at the beginning, we're definitely going to take questions. We're going to save questions till the end. If you can use the Q&A function, if you think of a question as we're going, please feel free to put it in Q&A. We will also have time at the end if you want to raise your hand and we can unmute you. That's totally fine also. Okay, we'll go to the next slide. So here we get back to some of the terminology that people get confused and that they misuse. So I hear, overhead, I hear general and administrative costs, I hear admin budget, I hear indirect, direct, right? There's all these terms. And I equate it to how we talk about the homeless definition. The term homelessness itself can mean very different things to everybody who says it, but within a specific program, it'll have a specific definition. And that's what we're going to try and do today. We're going to go through some of these terms and demystify them. I will define the ones that have definition. Some of them, like overhead, it's a term that people use that could describe a lot of things. So it's really important when you're talking about administrative costs to know what type of administrative costs and use the exact words that you need so that you, again, charge to the right place and you make sure things are eligible based on where you're charging them. So let's go to the next slide. We'll start diving into some of these terms. So for the CoC program specifically, we have two different terms that talk about administration. So I hear people say the CoC program, the admin budget. I encourage people not to say that. I encourage people to instead say project administration budget, because the budget for the CoC program that has the word administration in it, it's project administration, not agency level, it's project level administration costs. And we're going to go through the details of what those are and what's allowable. In the CoC program, that can be up to 10% of your grant award. And it's a very finite list of eligible activities that HUD has defined in the CoC program interim rule. Program administration costs, project administration costs can be up to 10% of the grant award, but it's important if you're new to this to know that it's not always 10% of your award. In your initial application, it's going to be 10% of your award. But because your rents go up every year, if you're a housing project, slowly that's going to get out of balance and it's not always going to be 10% of your award. So that's where your budget comes in, right? Like it's the same amount of money, but how are you going to spend it? The project administration line does not change year to year. The other terminology that the CoC program specifically has is rental assistant administrative costs. This is something that was left out of the CoC program interim rule, but I have a slide later where I can tell you kind of like what those specifically are. Rental assistance administrative costs are specific to if you have a rental assistance budget line item, a BLI. So it's important, right? Just within the CoC program, we have two things that kind of sound the same if you haven't been in it day to day. Indirect costs, which we'll spend quite a bit of time on at the second half of this training. Those are the costs that are shared and their objectives and costs that can't be linked to a specific thing. So typically it can be things like the copier, right? Like everyone uses the copier maybe. It can be the office space if it's a shared office space. These are things that support you to do your job and support you to implement the CoC program, but you can't say this is only a CoC program cost or this is mostly a CoC program cost. It's things that are the general structure of your agency. Overhead, this is the best definition that I could kind of find about what overhead is. This is a term that people use to talk about the things that are fixed, right? No matter how many grant awards you have or how many projects you have rent for your office space, you have utilities. Maybe you have transportation costs depending on the type of agency. You have, like I said, the utilities for the office space. This is a general term that isn't used in the federal regulations. It's just more of a descriptor for how people talk about agencies. And then general and administrative, again, these are the expenses that are incurred by a company, and they're incurred whether or not you produce or sell anything. So like your main office costs, they're there, whether you have 2 awards, 20 awards, or 50 awards. Those are just things that are part of the agency, and your cost allocation plan will talk about how you're going to charge those things out based on the projects you have and the types of expenses they are. So this is just a good reference for how these things are defined, and a good reference as you're onboarding people to show like kind of the confusing nature of these terms, because they can all sound the same because they keep using the same word in a different way. Okay, let's go to the next slide. As we talk about costs, we're going to talk about direct costs and we're going to talk about indirect costs. So starting with direct costs, they are really what they sound like. They are costs that can be specifically identified with a particular award or activity, and they're easy and they're accurate to place into a particular activity, right? So a direct cost, I am in the rapid rehousing program. I meet with my participant. That's a case management activity. I did eligible things. I have a note. That is a direct cost that can be billed directly to the CoC program grant. It's a very neat and tidy line that goes down for that. The salaries, again, of people that are working directly with participants are typically there. Direct costs are also the rental assistance. Again, if you're a rapid rehousing, RRH program, or if you're a permanent supportive housing, a PSH program, you will have maybe rental assistance budget or leasing budget. All of those are direct costs. You could say this is really my program cost, and I can track it that way. Okay, next slide. Indirect costs, again, we talked about, are those that are shared. They can't really be given to one part of the agency or one grant, and you have to pay for those another way. They're tracked in a different way. Your finance department knows what all the costs are that aren't directly billable to any of the grant awards that you have going forward. Basically, indirect costs are the things that after you've put all the direct costs in place, you've drawn all the lines, anything that's left over is typically an indirect cost. It can't be charged to a particular program. How your agency covers and treats those indirect costs, that's where things are different agency by agency. Let's go to the next slide. People always say, great, give me a list of indirect costs. I'd like a list of what they are, and then I can do it right. But there isn't a list because each of your agencies has the ability to structure yourself in the way that makes the most sense for the type of agency you are. A community action plan, community action agency is going to be structured differently than a legal services nonprofit, right? Like they have different needs, they have different funders, they've grown their agencies in different ways. So there isn't a defined list of indirect costs. HUD expects you as an agency to know what your direct costs are. And if you have either a negotiated indirect cost rate or you're using de minimis rate, which we'll talk about more, then you will need to be able to explain what is in your indirect cost pool. Here you can see some of the costs. HUD kind of gives you a little bit of information. There's facilities and administrative costs. So again, that building cost, the utilities, the things that are supporting you as direct service staff to do your job. You're going to see throughout this presentation a lot of excerpts from a really good resource that HUD put out. They put out an indirect cost toolkit that applies to both the CoC program that we're talking about today, as well as the ESG, the Emergency Solutions Grant Program. So you'll see a lot of the excerpts here. If you have questions about indirect costs, HUD suggests that you talk to your field office. Everybody has a field office representative who manages their grant with them. Or there's a feature called an AAQ, Ask a Question, and you can always submit a question to that feature on the HUD Exchange, and they can give you guidance back. My word of caution is if you're going to ask a question through the Ask a Question feature, then you're going to have to live with the answer. So only ask questions that you really need to, that you need written clarification on for your documents. It is best to first look through the publications that are out there, talk to your field office, and keep good practice. Not saying you shouldn't ask questions, just don't ask every single question you want, because you're going to have to live with the answer. And you should just have good practice and follow the guidance and the regulations and not worry about getting guidance for every single move that you make in your finance system. We'll go to the next slide. So here we're back to that budgeting. This is an excerpt from a really good curriculum that HUD has online. I think it's back up. It was down a couple years ago. They were kind of revamping it, but I believe it's back up. It's financial management. This is an excerpt from the 201, but they have a 101 management, but this one talks about budgets. So again, here, direct costs, single program, personnel, client assistance payments, rental payments, indirect costs, the administrative support, the utilities, everything that allows us to easily do our job during the day, the paper clips, the pens, the paper, all of those types of things your agency might have as an indirect cost, not a direct program cost. Okay. Next slide. So now we're going to spend a little bit of time talking about what the CoC, the Continuum of Care Program, thinks project administrative budget costs are, what are allowable costs. And then we're going to talk about indirect costs and kind of how those are set and how your agency can think about them. So here you can see this is the high level definition. This is an excerpt from the CoC program rule. Project administrative funds can be used for general management, oversight, and coordination. Big title. We're going to go way into much more detail about that. The second thing is training on CoC requirements, and specifically the cost of training on the requirements that you're maybe doing locally, or if you want, if they're offered attending HUD-sponsored Continuum of Care trainings, those are eligible project administrative costs, so that particular budget line item. Also under this project administration is the environmental reviews that all projects have to do to various levels. The cost of doing that review, doing the document, working with the responsible entity, that is all project administrative costs that you do at the beginning of your grant term. So these are all direct costs. When you're thinking about project administration, these are direct costs that you're tracking and charging to this particular budget line item. Your project award for CoC program, if you don't already have it, I would definitely grab it and look at it after this training. It has multiple budget line items that you have to keep track of, and we're just talking about one of them here today. So we'll go to the next slide. A couple things to know about project administrative guidelines that HUD has set. If you're a recipient with subrecipients, you're required to share at least 50% of your project administrative funds with subrecipients. So you have to make that offer to subrecipients. If you have multiple subrecipients, it's 50% between all of them. I get a question a lot of like, what if someone doesn't want the money? Do I just have to give it back to HUD? And you don't. So if you offer your subrecipients to bill you for project eligible project administrative costs, then you have to share at least 50%. But if they say, you know what, I'm good, I don't want to track them, or I'm good, we deal with them a different way, then you don't have to, you can use that money at the recipient level instead. You also have a responsibility as a recipient to make sure they are spent on eligible costs. So even if you award a subrecipient money under this, they still have to have eligible expenses. So it's really worth looking at your contracts and your expenditures, every quarter or at least twice a year to make sure that the money that you've allocated is being spent. Otherwise, you can pull it back in-house and you probably have eligible expenses that you can make sure you're spending down all those grants so that Rhode Island isn't giving back money that just goes to kind of the general, budget of HUD and the general budget of the United States. The other rule that HUD has put out there is HUD wants you to charge costs to other budget line items if they're eligible there. You can't just charge it to project administration because you have money left in that bucket. It has to be if, and I'll give you an example, if you have a rental assistance program, which we'll go over, and they have costs that are eligible to charge to them, you can't just bill under project admin because that's where the money is left over. So if the CoC program rule says something's eligible somewhere else, you need to bill it there and not just move it over to the budget line item that might have funds. Okay, we'll go to the next slide. We're going to do a couple slides. We're going to deeper dive into what HUD means by general management, oversight, and coordination, because again, these are really big terms that are like really high level. So the two things that they mean here, and then we'll go into kind of subcategories of this, are general management, oversight, and coordination are the salaries, wages, and related costs to the recipient staff or subrecipient staff for staff or other staff engaged in project administration. The costs in this category, they could be the entire salary and wages and costs that are allocable to the program, where each person has the responsibilities, or the more likely scenario is it's a prorated share of the salary, wages, and related costs of the people that are doing those assignments. Prorated doesn't mean you don't have to track it. It just means it's a smaller portion of it. So you would maybe bill 25% of my time because I'm doing budgeting and reporting. And then maybe the 75% I'm the rental assistance administrator. So I might have, as a staff person, I could be charging to 2 budget line items within a project. So let's go to the next slide. We have a very long list of specific things. So when I said it's a finite list, this is the finite list of what HUD considers project administrative costs for the CoC program. So here you have preparing the program budgets, doing any amendments like we talked about. The budget's a living, breathing thing, doing amendments to those budgets and schedules. Anything you're doing around creating compliance systems, so looking at the quality of your work, making sure you're serving who you're supposed to, making sure you're spending funds when you want. Looking at the program process, like if you were awarded 15 units, are you renting 15 units? If not, like what is that monitoring? What's the course correction that you're going to do? So any of the monitoring that you do internally or monitoring your subrecipients, that would be project administrative costs. Preparing reports that either HUD requested or that are directly related to the program. Part of your audit and monitoring findings, whether the audit is your agency level audit, a HUD level audit, CoC level audit, all the different ways you could be audited. Those things would be project and administrative costs. Before I go to the second column, I just wanted to kind of name like these budgeting and monitoring and quality assurance. These can happen in many different ways within your agency. When we think about this project administrative budget line item, we're really talking about the person typically that's closest to the project. So typically this is the project manager who's working with finance on the budgeting. It could be someone in your finance department is actually billing to the project administrative costs, if that's the way you set up your agency. But your overall finance director, who may be looking at the overall agency budget, probably isn't a direct cost charged to the CoC program. Again, it all is based on how you allocate your costs and how you set up your agencies. But I really want you to think of this bucket of money as close to the project as possible It's only 10% of your award. It is not going to cover all of your costs. So you really just want to think carefully about who you're including in this and how you can expend this money in an eligible way, in responsible way, to get your costs covered, but not so much that you're overshooting and going for costs that are like more agency level. So that's the left-hand side. Let's go to the right-hand side. HUD talks about evaluating the program results against the objective. So when you write your project, you say, I'm going to serve X number of people, and X number of people are going to get a job. And then you look at your program results, you look at your files, you look at your HMIS, your homeless management information system data, and you say, okay, did I get there? Anybody who's managing someone who their primary responsibility is to do project administrative costs, they can also be billed to the project admin. So the person the project manager who might be doing all the things on the left in conjunction with their finance department, they have a supervisor. If this is 25% of their work and they have supervision, that person supervising them might be able to bill 25% of that supervision time to the project. Again, this gets into how do you bill supervision time? How do you track supervision time? What is the timesheet? And can you get down to that level of detail for people that are in that management role of doing supervision for people? So it's allowable, but it may be something your agency wants to charge or doesn't want to charge. If you have direct travel costs for people that are monitoring subrecipients, your mileage, the gas, all of that. If you rented a car, those types of things. And then these last two are kind of catch-alls for like things you're not directly doing, but things that you might be bringing in a contractor. So if you're a small agency and you have an audit service, you might take that audit and charge a portion of it out to each of your project grants, or you might have it up in your indirect, right? Like you decide where those go. But these last two are just kind of general buckets for things that you're bringing in outside parties for. And then the last bullet is talking about office supplies, utilities, space. If again, depending on how you organize your budget and your space, if I again am in that rapid rehousing program, I'm 75% doing rental assistance, I'm 25% doing administration for this grant. You might prorate my office space based on those two things. If I work across multiple grants, the math gets a little more tricky. But again, here we're going back to the CAP, the cost allocation plan, to say, like, how do I charge office space at my agency? And then your finance team helps you as a project manager put that actually into play within your agency. Okay, so it's a kind of overview of what HUD thinks the project administrative costs are. Finite list, directly tracked, and directly brought back to the project level. Go next slide. This is something I just wanted to put in here because it's another administrative cost that HUD talks about that's allowable, that uses, again, the same term that we're throwing around a lot today. The rental assistance administrative costs. So in your project, if you're a PSH, permanent supportive housing, or RH, rapid rehousing program, you may have a rental assistance budget line item. And in a rental assistance budget line item, in the form that you submit to HUD, it just says rental assistance. And the calculation is I have 5 units, 2 or 1 bedrooms, 2 or 2 bedrooms. This is the fair market rent. Calculate. Here's the total amount, $50,000. That's what you get. HUD does not ask you or give you space in the form that you're applying to them to break out how you're going to use your rental assistance budget line item. But it's important to know that there are some what are kind of considered administrative costs that are directly billable to your rental assistance budget line item. If you have enough money to cover rent, you can use any surplus funds aside from what you're paying for rent and utilities to cover staff time to do these things. You can process rental payments to landlord, be the project manager looking at that rent roll before it's submitted to finance. Examining income and family composition. Under the CoC program, you have to do recertifications. So looking at that, if someone comes to you with an income change, you're having to recalculate things, providing housing information and assistance, inspecting units for compliance, and then receiving new participants into the program. The reason I wanted to provide this slide is because HUD inadvertently left this out of the CoC program interim rule. So it's not written down anywhere that you can do these things, but it's on this slide. And I did get it from HUD training materials that TAC had done, and it is posted on the HUD Exchange if you need that kind of source information, but which is really important to know, there are things that you can bill to your rental assistance budget line item that aren't evident if you're new to this and you're just looking at the budget that you submitted to HUD. It's not clear, and that's not flagged for you anywhere. So just again, another list for you to look at, like what your duties are, how you're rolling out things in your project. I haven't talked yet about job descriptions, but I've talked about very specific activities: budgeting, training, traveling, inspections. A good rule, once you get this all sorted out, is that your job description, they don't have to list out these particular things, but there should be some type of a tie back. So if I'm billing the project administrative budget line item, something in my job description should talk about that that's part of my role, right? Again, it helps, like as a employee, I will have my job description. Hopefully, if people are changing roles, that's something you would change. So really looking at your project job descriptions to make sure that this is reflected if you start moving things around, I think is really important. Okay, next slide. Okay, this is a really easy question. You're all going to get it right. If you're brave, go ahead and put your answer in the chat. Our CoC program, project administrative costs, direct or indirect? Give people a chance to think about it. The answer is direct, mostly. Everything I talked about, those are direct costs. What I'm going to talk about next are indirect costs that might be layered on top of them. So everything I just went over for the specific slides for CoC program, those are direct costs that you would be able to track through receipts, you'd be able to track through timesheets, those types of things. So, okay, let's go to the next slide. Okay, that was a lot of information. We were focusing specifically on the CoC program. Now we're going to pivot into indirect cost rates and what that looks like, who sets them, what these terms mean. Again, as we're going through, please pop any questions that you have in the Q&A, and we will address those at the end. And we'll also have a space again at the end to raise your hand and come off mute. Okay, so indirect cost rates. So indirect cost rates are costs, like we said, that are not traceable to a specific project, right? It's just kind of those costs that help you do your job. It's really important to know that an indirect cost does not change your budget that HUD gives you. A lot of people think, oh, great, HUD allows indirect costs, I'm going to charge them for indirect costs. But when you look at your budget, if you didn't know about indirect costs, you didn't build that in to your project budget, right? That you built outside of the HUD application submission. So indirect costs don't increase your budget. They're just allowable within your budget. So we're going to talk about what they are and how to apply them. There's two different types of indirect costs. There's de minimis indirect cost rate. That is a federally set standard. It's, I believe, 15% now. That is just something that's allowed based on the regulations and how they're written. There's also a negotiated indirect cost rate agreement that could be very agency specific. So everyone is allowed to charge that 15% if you have 15% worth of indirect costs, which typically everyone does. But as an agency, you may have gone through a very laborious process to get a specific indirect cost rate for your agency based on how you structure your finances. So maybe you're much larger, you have a lot of federal grants that you're working across. You may have an indirect cost rate that's 33%, like whatever that is, but you have the documentation, and by you, I mean finance department and the overall agency has that documentation showing how they got there and what's included in the indirect cost rate so that the oversight agency can see how you got there and see that you're applying that across all of the federal grants. It is important to know that with indirect costs, if you do start charging them, you have to charge them across all federal grants. And that's really important because that's why it's not a project level decision. I've had many a project manager come to me and be like, great, I heard, and they used to be 10%, so now they're 15. I heard I can do 10% of like this, and I'm gonna start charging this. And I'm like, but you can't because you don't know what your indirect costs are. You don't know kind of like how your agency is doing this. You have to work with your finance department because you can't do it on one grant because it has money and not on another grant. You have to have rules across all the grant types. Okay, next slide. As an agency, it's a big question on whether you implement or not implement them. I've worked with agencies, we've worked many months on it, and then they look at it, they're like, we're not doing it. It's actually going to take more work. It's not going to get us a lot. We're going to stick with the way we're doing things now. So this again is why it's an agency level decision because it's a burden that your finance department is going to be taking on. It's a conversation between finance and projects to make sure the projects can afford it. Where's the money going to come from? If there isn't enough money, how is that going to be paid for? So there's really a cost benefit kind of exercise that you want to do at an agency level. That is something your accounting firm can probably help you do. There's other federal trainings out there that are going to go much deeper than we're going today that talk about indirect cost rates and what to do it. If you have just like maybe one federal grant, you probably aren't going to do it. But if you have a lot, maybe you will. So again, also your growth, if you're really growing and you're growing your financial portfolio, that's federal grants, then maybe you do want to do it. There's so many different factors that go into it. And this last one, the availability of the information. Most agencies I work with that want to do indirect costs, they'll get stuck for a little while in trying to map out what their costs are, like what are direct, what are indirect, do we all agree? Right? It's a lot of conversations at your executive team level about how you want to label things and how you want to move things going forward. So to go here, right, you have to have very specific lists of your agency charges. It has to match the way you're doing your financial management. So it is up to your agency level to really think about like, are we going to do this for all our federal grants or does it not make sense right now? Go to the next slide. This is a question that comes up often, mostly because indirect costs feel hard to people. And if you have subrecipients, the question is, if I have subrecipients, can I prevent them from using indirect cost rate? And HUD has determined no. But if you have a subrecipient, you can't say it's too hard. I'm not going to let you bill indirect costs because I don't know how to manage those. You have to let them if they have a method that you're comfortable with. They have a negotiated rate that they can prove. You still have oversight and they should still be able to explain to you kind of how they're getting there. But you can't just blanketly say, no, I don't want to because it's too much work. You may have decided that at your agency level, but you can't decide that for your subrecipients that are part of your award. Okay, let's go to the next slide. So we're going to go a little bit into the two types of indirect costs. There's the de minimis rate, which we can go to the next slide. So if you don't have an approved federal rate, you can use the de minimis rate, which is 15%, and it's 15% of the modified total direct costs. So I spent so much time on direct costs before because once you know your direct costs are, you can then calculate what percentage your indirect costs may be. It isn't as simple of just saying like, oh, great, I billed HUD for, I don't know, $5,000 this month, 15% of $5,000, check. I'm just going to add that onto the bill. That's not what it is. You still have to work with your finance team to make sure like this makes sense for you. And the modified total direct costs, we're going to go into like, what does that mean? What's included in that? Again, you can kind of get the theme here. There's a lot of lists. There's a lot of checks and balances when you're doing this administrative billing. So let's go to the next slide and talk about like what that base is. Like what are the direct costs? Here we get back to, again, some excerpts from that really good toolkit that HUD put out of the indirect cost toolkit. So the modified total direct costs isn't everything that you bill to the HUD grant, but what's included in it are the salaries, which is why it's so important to do the time tracking, right? You have to do time tracking to know which salaries go to which project. Any fringe travel, things that go there. If you have subawards or subcontractors, it's up to the first 25,000 of each subaward or subcontract. What's not included in the direct costs are equipment, capital expenditures, patient care, rental costs, which is like the ding 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 for CoC programs, tuition remission. Again, there's some things on here that aren't going to be CoC program. The excess above the 25,000 of the subawards that you're giving, and other items that have an inequity of direct costs. So like you, I'll think of an example for what that is, but like basically you can't charge it just because you have a cost doesn't mean it's going to be part of your base or be excluded from your base. So the top part at the top talking about salaries, direct salaries, wages. When you think about the modified direct cost for your rental assistance budget, you're going to have rents that you're paying to landlords. And if you so choose, you're also going to have staff costs, those rental assistance, project administrative costs. It's the salary of the staff. That's going to be the base. And sorry, I'll change this to the 15%. That is the base of how you're going to apply the 10%, which it was before, and it's now 15%. So when you're looking at your overall budget, typically, not a rule, but typically, it's the salary cost that's going to be the biggest part of your base, but you can't use that unless you're tracking the time in a way that is allowable to HUD because you have to be able to trace it back. We'll go to the next slide. Here's a chart. Here's an example. Again, this is the 10% because it changed last October and this was published before then. So this is an example in the toolkit. There's this rapid rehousing one, and the next slide will stay here for a minute, but the next slide is going to be a supportive service one. So this shows you the different budget line items. So we have a rapid rehousing service, staff, salary and fringe. The second row is my rental assistance expenditures. I have a subaward for legal services to help the people that are in the rapid rehousing program. And then I have administration costs, so project administration costs, down at the bottom. You can see what's included and what's excluded. So you would have a similar kind of exercise within your project with your finance department about what you're going to include and exclude. You can see the rental assistance is not included. So when it comes out the other side, that would be a 0. So this is just one example. I will say, just I don't want to mislead you, the examples that HUD gives for the administration staff salaries, it is not typical for your HR and your fiscal staff to be in the project administrative budget line item. This is a toolkit beyond CoC program. It's possible that HR is billed to your project administration, but it's not a typical thing that I've seen in my experience in 20 years of doing this. But anyway, so this table, this just kind of shows you the math exercise, and it shows you why you can't do this on your own, why you need to have like the payroll costs and records from your finance agency. We'll go to the next slide. Here again, it's just an example. This is for a supportive service only grant. They have case management. They also lease a building. So again, you can see like a physical cost isn't typically part of the modified rate if you're using the de minimis example. You're not going to apply the 15% on top of fixed costs because the overall functioning of the agency, when you pay that rent check, the time it takes to write out the rent check, yes, that counts. But the rent itself is not something that's benefiting, right, from the indirect activities that you are trying to charge out to the grant. That's the way I like to think about it. Okay, we'll go to the next slide. So we talked about there's agency specific. We can go to the next slide. If you have an agency specific rate that you've done, You do a similar exercise to the modified direct cost base that we talked about. You're gonna have your total indirect, you're gonna have your direct cost base, which again, you have to document well, you have to submit to your oversight agency. It's a very laborious process. It can be worth it, but it is a very long process. And then they look at that and approve or disapprove the percentage that you ask them for. So again, it could be 33%, it could be 50%, it could be 25%. Now that the 15% is de minimis, not everyone maybe wants to go for an individual rate. It might not be worth all the work if you're only going to get 20% versus 15%. So go to the next slide. If you want to apply for a direct rate, there is a process for the CoC program. This is who you would email to do that. If you have one, if you don't know, if you're on the call today and you're like, I don't know if we have this, you could definitely talk to your finance department and ask them if you have it. And again, it's not an easy undertaking. It really has to be worth the time and effort and maintenance that it would take for your agency to go through, but we just want to let people know it is a possibility. Okay, so thank you for letting me share a lot. We'll go to the next slide. Share a lot of information about indirect and project administrative costs. And then I promised you a post test. So here are the acronyms again. I think I talked about all of them as we went through. If you go to the next slide, you can see what they actually mean. So BLI is a term that you hear a lot in the CoC program, or I say it a lot, so I think people hear it a lot. It's the budget line item, and that's really important because HUD is very specific about where you charge things. And unfortunately, many of us in our jobs don't have one job that we do all day long that only does one thing. Many of us have many hats that we're wearing, so we are going to have multiple budget line items. Before I came to TAC, I was a rental assistance administrator. I had probably a little bit of case management. I definitely had project administration, and then I had other, and I had 20 grants. So 20 times 3, that was my timesheet, right? Very large, very long. All those budget line items had different things I could and couldn't do and how I had to track it. Time and effort is really important. That's the log where you're tracking who you're talking to, eligible activities throughout the day, and that supports the payroll costs. This is the number probably 2 place that HUD has findings for CoC program recipients is people are not tracking their time and effort. They're saying, hey, we think Melly's gonna be 50% this, 50% that, but they don't track it and they just assume that it happened. HUD doesn't like assumptions, HUD likes proof. CFR's Code of Federal Regulations. So when I kept saying the CoC program interim rule, there's a bunch of different rules that regulate everything you have to do. The Office of Budget and Management, OMB, I don't think I talked about that one, but they are the ones that are overseeing kind of those overarching things around the 2 CFR 200. We talked about the CAP a lot, the cost allocation plan. We talked about the NICRA, the negotiated indirect cost rate agreement. I had to Google that the first time someone said it. I'm like, what does that mean? Indirect cost rate, you'll see as IDC. We talked about the modified total direct cost. That's if you're using de minimis. And then the FNA and the GNA, these are just terms that you may use as an agency. If maybe you started without federal grants, this may be how you described yourself before you kind of got into this bucket. So we'll go to the next slide and then I'll go over a few resources, and then we can open up to any questions. So we talked about a lot of the details, but just to sum it up, if you take nothing else away from this, if you're trying to go back to your agency, CoC program, project administrative costs, finite list, clearly defined in the CoC program rule. You're going to have the slide, these slides if you want them, that spell it out. It's a direct lift. Mostly the direct costs. You might have indirect costs that are layered on top of your project administrative costs. It's a finite budget. It doesn't pay for everything. It pays for, CoC program will pay for a portion of the project administrative costs. Indirect is an agency level thing. The eligible costs are based on the agency plan, and it could be the de minimis rate that anyone can use, or it could be agency specific. Before I open it up to questions and go over resources, I might have implied this, but I want to say it more specifically. For project administrative costs, right? Like I talked about, it's a lot of salaries in there. If I'm project administrative costs, I might have $5,000 of direct charges to project administrative. I am being supported by the agency, so that could have indirect on top of it. So it could be my $5,000 of direct things that I can like tie to my payroll. And then there could be, depending on the modified cost base, there could be that de minimis charge on top of that. So there can be indirect charges in your project administrative budget line item. That's why it's really important to think of them separately. It'll be easier now that project administrative is up to 10% and indirect was changed last October. It's 15%. Hopefully that will help people keep it a little bit separate in their minds. Okay, go to the next slide. Again, you can have, we'll send out these slides with a survey later this week. I just linked to some of the indirect cost rate resources that are out there that are really good. Some of the Part 200 things that I thought were really useful. Go to the next slide. Some financial management resources. Rhode Island CoC specifically has a CoC program fiscal compliance training on their website. So I linked that here. HUD has a financial management curriculum, a 101 and 201. That's really good as just like you're a new project manager. If you're coming into this and just don't have the language, those are really good to use as part of your onboarding. And then there also is a module that talks about specifically much beyond this overall grant and program administrative requirements. And the Rhode Island CoC is hosting, I believe it's in July and August. There are 2 sessions that Housing Innovation is going to be doing that dive much more deeply into those project kind of grant responsibilities that you have to do at like an agency functioning level. So if you haven't signed up for the summer trainings, I think it's July 16th and I think it's August 5th and August 20th. There's a series coming up then. So if you want more information beyond these 2 little costs that we talked about, that is a place to go. Either go in the live one or we look at the materials after. Okay, next slide. General resources again. Next slide. Questions. Thank you everyone for hanging in there. I haven't seen a lot of people dropping off. I'll open up the Q&A. But Natalie, are there any questions that have come in that people wanted answered, or if people want to raise their hand and they can come off mute?
Thanks, Melanie. I'm not seeing any questions just yet, but we have a hand from Kirsten Davis. Kirsten, you can go ahead and share your question.
Great, thank you. And thanks so much. This is really helpful. Like you just summarized a lot of really great information. So first of all, thank you for doing all that. That was a lot to cover. I have a couple of questions about the indirect
Sure.
stuff. So we have just started to do the indirect for our grant. So if we are a sub-grant of a sub-grantee, do we then, since we're doing the 15% on our direct grants, do we need to then, like I'm on the other end of it, so then should I contact those contractors and be like, we're now doing indirect, we're taking the de minimis 15% and make sure that that's, let them know that we're also doing that with those sub-grants?
Yeah, that's a great question. So if you're a subrecipient or subgrant, depending on which the federal agency, what terminology they're using, my understanding is if you do it, you have to do it across all your federal grants. I don't know why that would exclude. I'm not an accountant. I should have said that at the beginning. I am not an accountant. But I think that's a great question for your, accounting team. I don't know why it would be excluded. I would say yes. I think here you run into the problem. The budget doesn't change, right? So if you're doing it across agencies, across projects. So it could be you say, we're doing this, it's tracked differently, or maybe paying for it differently. Right, but it should be tracked in your finance system, that it is a cost to that project. So yeah, so I don't see why it would be excluded. I haven't seen any language that says that. If you haven't already seen the HUD toolkit, I would look through there. But I don't see why it wouldn't be included. It's federal money, right? It's federal money. We're supposed to treat all federal money the same. So
well, and along those same lines, if we have a federal grant from another agency or another department. For instance, say the DOJ, but we have grants that some of those are budgets that were already established with a 10% de minimis. So and I have reached out to those program managers saying that now we're taking, it's been increased 15%, and they're like, no, it started with 10, it doesn't change or whatever. So in terms of being across all federal grants, like that's
tricky.
Yeah, they're not really.
Yeah, as I've seen it rolled out, and some of your peers in Rhode Island, they have more direct experience in this. But as I've seen it rolled out, some of the entities are saying like, no, it's not until this grant that was awarded during this time period. So there
That's
could
what
be
we
a
heard, yeah.
transition time, right, where people are catching
Okay.
up. That's the language I've heard people using, like, well, yeah, but our contract was executed under the old rule, that's why you can't move up. I think, again, in that case, it's more just documenting that within your agency. It's not something you're choosing to do, it's your funder.
Mhm.
You still have the cost, whether you charge, I guess I should have said that too. You have the cost whether you're charging them or not, right? Like you were already
Right.
paying for these before you heard about this indirect cost rate, right? It's just a different way of structuring your budget. But yeah, I think that I'm hoping by next October, right?
Mhm.
Once we get through a couple grant cycles, I'm hoping that settles out because I have heard that from different people. So
Okay. Okay, great. And then I just have one other question with the indirect. So under and this is kind of very specific, so I hope it's okay to ask, but
yeah,
under supportive services, there's when you're doing your worksheet in terms of what's included and what's excluded in your MTDC, in your modified costs, it says mental health services are excluded. But what if so for instance, our mental health services are done by clinicians that are on our staff. So it's like for us, it's a direct service because those clinicians are on staff. So it's not like we're outsourcing the mental health services. So in like my opinion, it should be considered a direct or should be included in the modified total direct cost. But I mean,
yeah.
Does it make a difference whether you have someone on staff or it's like something that you're?
Yeah. Was that in the toolkit?
That's in the toolkit, yeah.
Okay. It might have just been an example. I don't know if you have the page number, we can kind of look at it kind of offline after this. I'd be happy to take a peek at it.
Okay.
But there's no HUD, right? Indirect costs is across all programs. It has nothing to do with CoC program specific. So CoC program allows mental health. If you're billing the CoC program mental health directly, because that's your project design, your CoC said it's okay, that's what you charge, then the salary time, as long as it's traceable to eligible participants, then that would probably have, right, that person is being supported by. But if
Right.
I can see a situation where it's, you contract, because a lot of people contract for mental health services, you contract, like my old agency, we contracted with a psychiatrist at the major hospital. And so it was just a pass through, right? Like we got
Right.
billed, we didn't support him, we didn't get our pens and our paper and our shoes. So then it would be excluded. So this is where it's really important, that list. So you know, as an agency, I'm including this and I'm not including this. And it goes back to those job descriptions, right? I would be able to see and I would see the mental health, I'd see their timesheets and I'd see them flow through the payroll and
Yes.
flow out to the billing. So I think it's the flow and the tracing, but I think my guess is that's just an example. But feel free to
Okay.
email it to me and I can see if it was a bad example or a
Okay.
rule, or I'd be happy to look at it. So.
Okay, great. Thanks so much. I appreciate it.
No problem.
Okay.
Other questions that folks had about project administration, costs or indirect jargon that people need to talk through again? If there aren't questions, I can definitely let people kind of go back to their day. But maybe there's not a lot of questions because you already have one of these. You just wanted to make sure you were doing it right. Or I threw a lot of terms at you. You're not the one to do this and you want to go back to your agency and talk about this. So I think if that's the case, definitely think about it. If you have questions, if we need to do additional trainings, like I would just keep this conversation open at your COC level, to just, talk to peers. Some people have been doing this for a really long time. Some people are new to it. So if you're either like, great, I'm doing this right, or oops, I'm not, I'm gonna fix something, or wow, I heard a lot of terms, I'm gonna go ask someone at my agency if we're gonna do this. Or maybe you're like, oh, that's why they said no. That's why they keep telling me no, right? Like it could be any of those things. So I really hope that this information is helpful. Like I said, I'll distribute the slides and a question survey later this week. And I really appreciate everyone hanging in there. It's not the most stimulating topic, but it's really important. And it does affect the bottom line of your agency. So thank you for coming, and I hope you have a wonderful rest of your day.